Hello and welcome to the second episode of the StoneX Australian Cattle and Beef Market Report. Each fortnight, we'll discuss and look at the key dynamics, drivers and trends of the Australian cattle and beef market, ensuring that as a listener, you have the up-to-date details and insights to inform decision making. My name is Ripley Atkinson, the Australian Livestock and Commodities Manager for StoneX based in Sydney, where we're developing price risk management tools for the Australian beef industry to help the sector manage market and price volatility with our Australian cattle swap. We're brought to you by StoneX, a NASDAQ-listed global financial services network with 100 years of experience in global commodity markets. Remember that the trading of derivatives such as futures, options, and over-the-counter products or swaps may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and you should fully understand the risks prior to trading. Past results are not necessarily indicative of future results. This week, we're discussing the StoneX 2025 Australian Cattle Market Outlook Report, released last week, including the key production forecasts, themes and items to watch, bold calls for 2025, and the details behind these forecasts. To kick off, we must look back before looking forwards. Last year was a big year in terms of production volumes and throughput, particularly around slaughter numbers, considering the lows we were at during the rebuild, which lasted a good couple of years and continuing in Northern Australia. And the theme of higher volumes really started, or the movement towards the high production volumes really kicked off last year. We're going to see it this year and next year again. And the fruits of the rebuild in terms of higher cattle supply is going to continue now well into 2026. And in terms of looking back before we look at the outlook and the StoneX report, slaughter last year was estimated, or my estimates are at 8.25 million head, which is an increase of sort of 1.25 million on 2023 slaughter volumes, which is sort of 7 million head, about flat. That's a really big reflection of the growth in the herd, as I mentioned, but also the increase in processor throughput and their capacity to handle these higher numbers of cattle. We know during the rebuild, 2022, slaughter got down to 5.8 million. Processors were dealing with a depleted workforce, the challenges around that and what it brings. Now we're seeing a couple of years later, the higher throughput numbers are a reflection of that growth in processor throughput. But also the only way we get there is those lower slaughter numbers and obviously the retention of cattle during the rebuild. Last year's slaughter, or my estimates at sort of 8.25 million, that's 20% or 1.4 million head above the 5-year average. So it really shows how quickly volumes have grown, and it's about 10% or 800,000 head above the 10-year average. So fairly substantial increases relative to long-term performance in a very short space of time. What we get from higher slaughter volumes is increased beef production. Last year looks like it's going to be in line at about 2.52 million metric tonnes, and that 2.52 million metric tonnes is in line with 2014. Now, we killed last year, on my estimates, about 950,000 head of cattle less than what we killed in 2014. But our production volumes are equal. How is that possible? That's driven by carcass weights. Now, carcass weights last year, I'm estimating at about 308 kilos per head. In 2014, they averaged 275 kilos a head. That 33 kilogram increase in carcass weights is the driver of that higher production, despite the fact that we nearly killed 1 million head of cattle less than what we did 10 years ago. So that gives you a good example, an indication of improvement in the genetic makeup of the herd, the productivity of the herd, the ability for farmers to put weight on cattle, both obviously in the paddock, but also the genetic investment they've made, that translates into better performance in feedlots. We're feeding cattle for longer, which naturally lends itself to heavier carcass weights and higher turnoff. And that's a really big driver of how we've seen production volumes on par with the previous high in 2014, despite the fact that we've killed that many less cattle. Now, I've spoken about production and carcass weights, but we naturally need to look at exports as an industry and a sector that exports 70 to 75% of our production. Now, beef exports last year broke the 2014 record by a sort of 56,500 tonnes or 4.5% to 1.34 million metric tonnes. We exported just under 400,000 tonnes to the US. There was major growth in markets like Indonesia, which had a record year. South Korea had a record year. Big growth in places like Canada, which was not a new entrant, but it was interesting to see the growth in Canada. Other places in smaller, more emerging markets, Vietnam, Malaysia, Thailand, the Philippines, Taiwan, the list goes on. So really positive to see that the markets are demanding and willing to take the high volume of product. And it sets us up quite well for 2025 when we're moving towards those higher numbers. Looking forwards at a high level snapshot, the StoneX 2025 cattle market outlook, the cattle herd pegged against MLA's Beef Producer Intention Survey I'm estimating the herd to reach 41.5 million head. Now, my forecasts differ to other reporting agencies or other reports. Why or how is that possible? That 41.5 million, say relative to MLA's forecast for 2024 even, at about 30 million head, the reason there's a difference is I had an involvement in developing MLA's Beef Producer Intention Survey. Now, the way they derive that data is based on the levy payer register, which is reported by the Department of Agriculture out of Canberra. Now, the levy payer register recognises any producer that has bought or has sold cattle and paid that $5 per head levy to the industry or to the government, which part of is returned to MLA. Now, the latest data on the number of producers in the country in the year or in November 2024 when the data was extracted was there's about 81,000 levy paying producers in the country. When you use that 81,000 producers or levy payers and ascertain on a statistical analysis basis, basically coupled with the responses you get from the 3,500 producers that provided results from the survey in November of 2024, when you look at that data and when it's calculated across that number, 81,000, that actually equates to the herd being at these numbers we're talking about, 40 to 41 million head. Now, that's different to some other results, but it gives you a really up-to-date, accurate picture on the number of levy payers in the country. The levy payers essentially underpin where the data comes from, and with those up-to-date numbers on the amount of levy payers, that gives you the basis for these estimates to be calculated by MLA's BPIS report. Now, that's where I'm pegging my forecasts against that November 2024 wave. So for 25, I'm estimating the herd to reach 41.5 million head. Looking beyond that and at figures, slaughter carcass weights, beef production, exports, etc., that's translating to some fairly substantial increases in those other production forecasts. Now, I'm forecasting cattle slaughter to reach 9 million head, carcass weights to drop slightly to 300 kilos a head, but because of higher slaughter, beef production to break a new record and reach 2.7 million metric tonnes. Beef exports to break the previous record set last year to reach 1.375 million tonnes, and live exports to grow by about 100,000 head this year to 850,000, which would represent the highest live export volume since 2020 And that's really a product of the growth in the northern herd and those cattle made available, those high-grade cattle for export, which has been obviously a product of 3 excellent years, and the investment producers have made in genetics, improving their land carrying capacity and things like that. So there is some good improvement in that live export space, and we've already seen a pretty good start to 2025 with volumes and boats moving out of Darwin, and that's where that comes from. Now, on the herd and my, as I said, my forecasts and how that's based, as I mentioned a moment ago regarding the 2024 performance and how we saw the growth in slaughter and obviously how that translates to carcass weights and production, I'm expecting this year the northern herd to offset any decline in the southern herd. Now, when I say southern herd, I basically mean if you draw a line from Dubbo in New South Wales across the country and look south of that, that's what I recognise as the southern herd. And the northern herd essentially is mainly Queensland, naturally, the Northern Territory and the Eastern Kimberley, but that's where I'm looking at. Now, I expect the northern herd and the growth in the northern herd, which is reinforced by that BPIS survey or producers' intentions for that survey over the next 12 months to increase numbers to offset the liquidation that we've seen in the south due to the drought conditions that those producers and those cattle areas are facing. The productivity of the herd, and with the cow herd at its highest level in 10 years, is very significant, and it can't be underestimated how much better performing the cow herd is today than what it was 10 years ago. That's translating to obviously higher or better fertility, which is leaving more calves on the ground, higher marking or branding percentages, and lower mortalities. And with a good season, that's also assisting that. Producers are opening up land, particularly in the north, and what I mean by that is making water more accessible, which means the carrying capacity of the country improves because the utilisation of the grass or the grass assets is higher because cattle can travel further and access parts of a paddock or parts of the property which they might have not had access to before. And when I say opening up country, water points or access to water for those cattle is a big driver of that. Looking now to slaughter, as I mentioned earlier, you can really see how much of an improvement processors have made in throughput. So 2022, we killed 5.849 million head of cattle. It was the lowest slaughter in 37 years. 2021, at about 6 million head, was the lowest slaughter in 38 years. So we had 2 years of slaughter volumes, which were the lowest in a very long time. Processors obviously dealt with some challenges in regarding labour and accessibility to labour. And now we're seeing that cycle as the cattle cycle moves to where it is at the minute with higher production volumes, that increase or the increase in throughput fairly substantially. So this year, as I mentioned, slaughter forecast to reach 9 million head. I'm underpinning that by improvements and a larger labour force in the processing sector. They're more efficient. They can handle more numbers. Processors have invested a lot of money in either plant upgrades and improvements, or they've also brought on new capacity. There's a number of new, not necessarily new, but facilities that have either been upgraded or are opening and increasing throughput, which we didn't have 3 years ago. So now we're starting to see that volume come online, and that's why I'm expecting slaughter to rise by that 9% to 9 million head. Now, that would be an increase of about 750,000 head on my 2024 estimates of 8.25 million. Looking to carcass weights and production. Now, carcass weights I'm expecting to soften slightly. So the reason for that to 300 kilos, I'm estimating 2024 at 308. I'm expecting more females to be processed. Now, the industry is going to look at the female slaughter rate quarter on quarter, and it's going to be over 50 or 47%, which is just the long-term average. And the commentary is going to be around, well, the herd's liquidating. It's actually not. And they're simply some are simply going to look at that female slaughter percentage and say the herd is liquidating. I don't necessarily believe that to be true. Naturally, when you've got the biggest cow herd in 10 years and the most number of cattle we've had in 10 years, we're naturally going to see more females turned off. Those cows kept through the drought naturally have obviously been turned off, cast rage, or they've got fertility issues. We're going to start to see more females processed. It's just the way the cycle works. I don't believe simply from looking at the female slaughter rate that the herd will be liquidating. And talking of female kill numbers, that brings me to carcass weights. So because I'm expecting more females to be processed, and we might see volumes higher than the 2019 drought levels, which people may construe as liquidation, the reason for that higher kill numbers is simply, as I said, higher herd levels and more cows and females in the system. But because we're going to kill more females, I do expect that carcass weight to soften slightly to 300 kilos a head. Now, that's probably a little bit conservative because we're feeding cattle for longer. There's more cattle on feed, and that lends itself to high carcass weights, which might offset my estimate or forecast, but that's where I see carcass weights. And when you combine carcass weights and the slaughter volumes, production this year I expect to break new ground and reach 2.7 million metric tonnes. So that's a fairly substantial increase on last year even, and my estimates last year 2.5. So it's quite a big lift, but carcass weights and the genetic improvement in the ability and the performance of the cattle we're processing is significantly higher than as I mentioned at the start, than 2014. 33 kilos on average carcass weights are heavier than what they were 10 years ago, and that's going to translate to that improved production. When we look now to the next stage of the supply chain or the system, beef exports to 1.375 million metric tonnes. That's growth again of about 40,000 tonnes on what we produced or what we exported last year, which was a record in itself. Now, last year, beef exports on a monthly basis broke records 3 times. I expect monthly exports to break new ground again this year and break last year's records. Already in January of 25, we've seen the highest January export figures since records began at a touch over 80,000 tonnes, and that beat the January 2020 figure. So exports naturally are going to increase, and I've got full confidence that the global market can handle this product, particularly in a situation where we're seeing reduced competition from places like the US as it simply runs out of cattle when they go towards a rebuild. I'm expecting this year, and this is one of my big calls, I'm expecting us in 2025 to export over 415,000 metric tonnes to the US. Now, that will break the record previously set in 2014 or 15. So I'm expecting the US to be a really big customer of ours, and one of those bold calls in the StoneX cattle market outlook report is that we're gonna break new ground in the export volumes in metric tonnes to the US. That at a high level is where I'm seeing things on the figures. But when we want to look, actually talking of those high level figures, to make listeners aware, when I talk about slaughter volumes, we have to be aware that MLA's National Livestock Reporting Service weekly slaughter volumes are not mandatorily reported. So what that means is there's about 80 to sort of 78 to 80% of Australian processors report their figures to MLA on a voluntary basis. They don't have to, but they choose to for the better of the industry. That means that when you look at MLA's report, last week, week ending, what are we looking at? Friday, the 31st of January, we killed 140,000 head of cattle. When you compare those quarterly slaughter volumes from MLA's NLRS to the ABS reported numbers, which are mandatory, there's a 23.7% difference based on the quarter 3 24 results between the NLRS numbers and the ABS actual data. So if we see 140,000 head processed via MLA's report, you're actually looking at about 170,000 head of cattle, because you need to add the percentage difference that MLA's weekly report, slaughter report, doesn't capture. That's an important consideration to make when we're ascertaining where slaughter is. So this year, with slaughter, I'm expecting to rise. When we see that new capacity continue to build and more numbers going through plants, I'm expecting the slaughter volumes on a weekly basis to actually get close to 180, 190,000 head per week. When you include the difference between the NLRS numbers and the ABS numbers. Now, on a 4-quarter rolling average, the difference is 23.1%, and the difference in quarter 3 24 was 23.7%. So you need to add that when you're calculating slaughter estimates or slaughter volumes on a weekly basis from MLA's NLRS report. Now, that 180 to 190,000 head I was talking about will be the highest volumes we've seen since 2014-15, when we killed 9 million and 9.226 million head of cattle. We're now moving back towards these production highs, and we're not necessarily in a widespread drought yet, which tells me in time, when we do move back into drought, we're going to have sustained periods or between now and when we go into major liquidation, which, as we know, drought's around the corner, we're going to see sustained years, this year, next year, might even be 2027 as well, sustained years of higher slaughter volumes. And that, I think that 180 to 190,000 head per week I'm talking about is just a genuine evidence of the increase in processor throughput and capacity to handle those high numbers. Now, moving past, the high-level figures that you can read in the report, if you want to look at them, contact me. Happy to discuss it all. I think a couple of other things which is always worth talking is price and generally cattle supply and availability. I expect cattle supply this year to remain really strong. I think we'll see more numbers marketed, more numbers put on feed, more numbers moving than we did in 2024. And that naturally is going to lend itself to keeping a lid on upward pressure on price. A big thing that I mentioned in the report, and you can read the details, is producer confidence. Now, the weather determines the domestic livestock market here in Australia. No question. MLA's BPIS report says 60 to 70% of producers' decision-making is based on the weather. We all know the weather's critical, but producer confidence, or the lack thereof in 2025, I think will keep a lid on how much improvement we see in the market. Now, if Victoria, Southern New South Wales, South Australia has a good autumn break, I do see some upside there because producers are going to want to capitalise on the improvement in seasonal conditions. But I generally see a lack of producer confidence keeping a lid on how much demand there is in the market for the price to move higher. Without producers driving the market, there's no reason for processors and feedlots to up their prices. They're going to work off supply and demand, and producers, like we saw in 2020 to 22, drove the market due to a lack of supply and that intense demand they had. Money was cheap, seasonal conditions were good, prices were high. It was the perfect storm to see the market go to where it did. I don't see that this year, and that's why I think prices are going to sit between the 5 and 10-year average, probably closer to the sort of 10-year average. And that lack of producer demand is going to be a big contributor to that. As I said, cattle supply is going to stay high. There's going to be plenty of numbers around. Talking to industry involved in buying cattle, they're not concerned necessarily by running out of numbers. There may be some issues towards the middle of the year on weight, depending on where the northern wet season gets, which we've just started to see really kick off in the last week or so. And that's something to be cognizant of, but generally cattle supply is going to be good this year. Opportunities. I do see that discount for the heifers under steers continuing for 2025. As I've mentioned a couple of times, it's the highest cow herd or female herd in 10 years. there's no reason for the producers to jump into the market and compete really heavily to access heifers because they don't need them. It's why you're seeing a lot go to process on grass-fed kills, and you're seeing a lot going to feedlots because that producer demand isn't there. That discount last year, 70 to 80 cents, I see the same again in 2025, and it's going to provide a really good opportunity for those willing to step in and do a trade on the heifers. Looking further along the supply chain, I do expect increases in grain-fed turnoff. Now, in Q3 24, we turned off 860,000 head of cattle out of feedlots. That was the highest figure since one of the quarters in 2020, basically the second highest on record. I expect that number to continue to grow. We've got 1.4 million head of cattle on feed. There's genuine interest in expanding for feedlots. I expect that grain-fed turnoff to increase. And obviously with feedlots purchasing a lot of cattle at the minute, as we've seen in the early parts of 25, I expect that grain-fed turnoff to remain high. Looking bigger picture overseas, I genuinely think we're going to see continuing increase in exports to Southeast Asia. Philippines, Thailand, Vietnam, Taiwan, Indonesia, a number of those other smaller markets as well. There's going to be the demand there, and I think it really shows Australia's, its geographic advantage to our competitors such as the US and other countries we compete with in those markets, and also the demand and the interest from that new sort of emerging area of ours. And with it being on our doorstep, I continue to see some really positive opportunities for product going into those markets. You've only got to look at Indonesia from last year, record exports to that country. It's our 5th biggest market. There's a lot of opportunities there, and I'm really excited and keen to watch the growth in that Southeast Asian demand. What do I see as the risks? 2 key things. Now, these 2 matters I'm going to talk about, it doesn't cover everything and all the risks that we may foresee for the market in 2025, but one's local, one's more global. If you want to read the full report, get in contact with me. But locally, I see a soft underbelly for the cattle market. Why is that? A perceived, or I should say forecast, or actual change in weather to a dry bias, meaning like 23, the market collapsed because the market reacted upon a forecast, which did eventuate. It did get dry in places, but I don't see a crash, and I'm not suggesting that that's coming, but I do see a soft underbelly because of that lack of producer confidence I was talking about, and that either forecast or actual poor seasonal conditional change to some drier weather does concern me a bit with the softer underbelly. Now, we saw flatbacks in Queensland get to $4, $4.10. Now we're seeing the market at $3.70 to $3.80 less than 3 weeks later. There's a lot of cattle moving. There's not necessarily as big a producer demand around at the minute. Naturally, particularly those southern areas of the country, there's a lack of demand because seasonal conditions aren't supportive of producer interest. And I do see some potential risks because of a lack of demand and either a perceived or forecast drier bias or conditions actually get dry. Looking globally, this situation with the US and its geopolitical relationships, particularly with China, does worry me a little bit. If Australia, not necessarily we're going to get drawn in directly with a tariff issue, I'm optimistic that won't happen, but I do hold concerns if Australia's demand from key markets like China gets affected because US tariffs impact the Chinese economy, which in turn reduces demand for paying for Australian product. Now, our dollar's quite competitive. That's a good thing. But I do worry that there could be impacts from that, and that's something I'm keeping an eye on. For me, at the minute is all. I'm willing to chat with anyone on the specifics. Contact me for the report. Willing to share it. Questions are always welcome. So if something today has sparked your interest or you've got a question, send us an email to ripley.atkinson@stonex.com or send me a voice note, record it, of yourself, the question, where you're from, and I'll answer it on the next episode. We're always keen to hear from people and happy to answer any questions you might have. Next time, we're going to look through the ABS statistics, which are released not next week, actually. They'll be released next week on Tuesday. So I'm going to have a look through those, and then also going to look through the market. And we're going to get back to talking about the markets, what's happening in the markets, what's driving it and why. So make sure you subscribe to the podcast on Apple or Spotify. Give it a follow, share it with your mates. And as I said, looking forwards to continuing this, getting some insights in front of you all. Jump on the landing page and the podcast's episodes will be there. We're going to provide an opportunity to have a look at my market reports as well. If you want to discuss any of this with me, get in touch via my email or LinkedIn, and we look forward to chatting soon. Thanks.